This voice is taken from an article with the title, Provide Complete Bollinger Bands History, which has been published on TRADERTALKSNET. Bollinger Bands is a widely used technical analysis tool developed by John Bollinger in the 1980s. It is used to measure the volatility of a security over a certain period of time. Bollinger Bands consist of a central line, usually a simple moving average, SMA, and two outer bands, which are two standard deviations away from the central line. The bands widen when the volatility of the security increases and narrow when the volatility decreases. In the early 1980s, John Bollinger, a financial analyst and author, developed the Bollinger Bands technique. He believed that the markets are cyclical and that the prices tend to remain within certain ranges for a period of time. Bollinger wanted to develop a tool that could measure the volatility of a security and that could provide investors with an indication of when to buy and when to sell. Bollinger Bands are plotted two standard deviations away from the central line, usually a simple moving average, SMA. The outer bands indicate volatility, while the central line indicates the average price, WH. And the price of a security moves outside of the outer bands, it is often a sign that the security is overbought or oversold. This can give traders and investors an indication of when to buy and when to sell. The history of Bollinger Bands can be traced back to the early 1980s when John Bollinger developed the technique. Since then, Bollinger Bands have become one of the most widely used technical analysis tools in the financial markets. The bands are used by traders and investors to measure the volatility of a security and to determine when it may be overbought or oversold. Today, Bollinger Bands are used across a variety of markets, including stocks, futures, forex, and commodities. They are also used by investors and traders in a variety of timeframes, from short-term swing traders to long-term investors. Bollinger Bands have become an important tool for traders and investors around the world. They help traders and investors determine when a security is overbought or oversold, and provide an indication of when to buy and when to sell. The bands also give traders and investors an indication of when the market is in equilibrium.